So today I'd like to talk about the rise of gold. First of all, this year gold has risen by 27%, right, reaching an all-time high of 2,630 per ounce. Historically, gold prices were often linked to rising inflation. First of all, now, however, this time inflation is not the key factor. We need to know that there are many possibilities, and one of them is that they talk about inflation in time, but this time it is not inflation, because last week the Federal Reserve began cutting interest rates, and more cuts are expected in November and December as well. Now, this signals the battle against inflation, if not completely won, it's not 100% they've won yet, it's nearing a critical milestone already. There is a chance they would have. Okay, the Federal Reserve, it's more or less, they are doing quite well in containing the inflation, actually bringing it down. So while gold is traditionally viewed as an inflation hedge, its price can be influenced by other factors in the short term. Now, despite signs of disinflation, gold's rally this year has been driven by other elements, which with geopolitical tensions playing a major role. We need to know this. This is the real true hard fact that's happening right now. So since the onset of the Ukrainian war, with Russia's central banks like China and Turkey have increased their purchases of physical gold, especially of the US and its allies force Russian assets. So in the event of international sanctions, countries may rely on gold for funding when their central banks are affected. Russia is actually doing that already. Okay, they've been using their gold to continue to survive and fund the war as well. Now, China especially, they're having some issues with the US, right? They're afraid. And lately, like, for example, the US wants to stop the Chinese cars from accessing the satellites, the GPS and all these kind of things, the technology they don't allow, and all these kind of things. So it's getting more and more, the tense is there. You can't deny that. And because of this, China said, okay, it's better I go and get some gold. In the event any issue happens, at least I still can rely on the gold, right? So Turkey is also another one. Now, increasing risk in the Middle East, particularly with recent escalation of conflicts between Israel and Hezbollah, also contributed to gold strength. The threat of an all-out war at the Lebanese-Israel border is looming. These last few days alone, we have seen Hezbollah attacking much deeper into the northern part of Israel, and Israel also doing the same thing at the border. So it's the tension created from there definitely did add to the to gold, the rise of gold. Okay, now I mentioned about China actually buying the gold, but there are also other things that affect and is nearer to our part of the world, because as the tension is rising in China and US, the recent deployment of a US missile system in the Philippines capable of striking China has triggered sharp response from Beijing, escalating geopolitical confrontations in the region. Okay, so that's why you can't deny the fact that China is also protecting itself by claiming a lot of the islands south of China, they're saying it's their island, and building military bases there as well. Okay, so in the event there's a missile shooting from there, these bases could actually protect China, right? So you just can't get information from one side. We have to see from both ends. There is a reason for things to happen. Okay, but anyway, that's the geopolitical part. From a financial perspective, the Federal Reserve's interest rate cuts, if too aggressive, could increase the money supply. This inevitably will happen, because especially when the QE starts, if you will see a flood of money coming in, and this will risk another wave of inflation and a weakening of US dollars if this rate cuts is too aggressive. Okay, so they need to manage this and manage it well. Okay, but it's not easy. Okay, because they can't keep interest rates high for too long, the US, because the biggest issue US is going to face in it's already facing and will face even, it will only worsen because the ballooning government debt is another issue to be dealt with. The IMF, i.e. the International Monetary Fund, leveled an unusual direct criticism at the US policymakers, saying the country's recent standout performance among advanced economies was in part driven by unsustainable fiscal policies. Whatever they're doing now is not sustainable, right? Your debt is just ballooning and ballooning, and one of the reasons, the best way to actually pay off debts, you know, is actually via inflation. So they've inflated. Now it's over. They need to control because their U.S. labor market is being threatened, and they cannot leave this too high, because if all this labor market is threatened, right, profits will drop. Taxes will drop as well, and then the income for US won't be as high. So they have to control that part of it. On top of that, they have an interest, is because now as the debt increases, they have to pay higher interest because the interest rate is high. So if they cut it, then they pay less. So these are the things that, you know, they have to manage and manage very, very well, right? So in the end of the day, if you look into the US balance sheet, right, you can see that it's not a surprise the IMF has warned that something will give if the US continue to overspend. Not only the US, any country that overspend and spend without proper balances of its finance eventually will have trouble, right? So according to the Congressional Budget Office, US public debt is projected to reach 45.7 trillion US dollars, or 114% of GDP by 2033, up from 97% at the end of 2023, in 10 years time, you know. And this was mainly driven by the COVID-19 related stimulus, aggressive infrastructure investments, clean energy projects, and skyrocketing interest costs. Right? This is no small amount, yeah. And you know, even Donald Trump has joked recently and said that we can use Bitcoin to pay this. This is no joke. Seriously, 45.7. Now, adding to the uncertainty is the potential for political turmoil in the US, especially with the possibility of a contested presidential election in November. So it's sometimes it's in, you know, the politicians, they mention that, you know, the Bitcoin can pay this, and they want to get votes. We understand that part of it, but for Bitcoin to actually come to a level to be able to pay all this debt, we are talking about a catastrophe in the financial markets. A huge collapse where people are running away from other asset classes and coming to Bitcoin. It's not going to be fun. Okay, it's not going to be fun, I'm telling you that. So I really wish that don't happen, part of it. Okay. So at the end of the day, these factors, geopolitical tensions, rising government debts, and political instability, makes gold's safe haven appeal even stronger. As long as these concerns remain, gold prices are likely to stay elevated. So first of all, for gold to come down, escalations has to drop. Okay, so we shall wait, you know, until the election in November. New president comes in, then we could actually see something really, really change. I believe that could actually happen from that. The war probably will start to end from that area. Okay, so and then gold will probably start coming down because we have taken away some of the issues. But for the way the US is spending, that's not going to go away. But whatever, like the geopolitical stuff, that can probably end, hopefully. And then the uncertainty of the political turmoil, that can also move away. So come November, I think probably things will start to gold will probably start to come down from there. But then again, we need to look at all these factors, where they are at that point of time. Okay, so with that, that's the report for today.